Hi, today is Sunday the 9th, and this is the SPX Outlook for the coming week. The market has been really crazy this week. After the earnings season, at least on the large techs, being over last week, we had some pharmaceuticals like Pfizer. With this earnings season is tailing off now, and the market is definitely looking for something. And on Friday, we had the very low NFP that pushed the market higher. I think it was an anomaly because maybe the low-paid jobs are not back to work because the economy is not fully reopened, or maybe they are unwilling to go back to work because the generous packages have disincentivized the need to work, at least in the near future. And this may be also an indication that there will be pressure on wages coming forward. So the upside was a little bit unrealistic, but we will see how it pans out in the coming week. What we are seeing is that the market, if we look here, is aiming for this fib pattern from here to here, down here, and then up. It passed the first fib target that was on the strong resistance, and it may be aiming for 42.45 now. That being said, we see that the lines have not moved. 42.20 is still a very strong resistance, which has not, it has been penetrated, but it has not moved upward. So I would say this may be an anomaly. So we will see if the market retraces to 42.20 to maybe bounce again or retrace lower. The fibs here are on 4200, 4195, 4183. As you see, it's very narrow because this scale is on 5 points. So it shows that the last week was a trading range, really market looking for direction. So if we look at this, we will have to look for technical patterns, maybe an upward channel forming. We will see. I will confirm that on Slack tomorrow or the day after. So for the time being, I would say that we will have to see whether the market goes to 42.45, maybe tries it. This is also the bullish resilience level, this green line. So this could be an important level to test on Monday. This is a 4-hour chart, so generally it gives us some indications for the coming 2 days, generally 5, 6, 8 bars. So I would say yes. Looking at this pattern of a channel forming, it is still bullish, but we will see whether the market passes this one, tests this one for support, or goes lower and goes back to trading range mode. If we now look at the longer time frame, of course, besides this profit taking a few days ago, last week, this is still very much bullish. And if you can see this, there's definitely hesitation. This rise was unrealistic. We generally talk about a natural angle of attack or natural angle of descent. This was too abrupt, and that's why we've seen some hesitation in the last couple of weeks. Will the market resume north? It is of course possible. If we look at the strong resistance here, it is much higher on 43.80, which would mean that this pattern would reach this third level on 43.60. Of course, I don't see this happening without some tremors and some hesitation. So let's see whether it goes back into this trading range. At least, unless there's some very negative news, there's no reversal coming in the next couple of weeks. So the old saying, sell in May and go away, it could be sell in June and whatever. I don't know the expression for June, but it looks like because of this very peculiar environment and situation, we may have either a reaction late May, maybe June. This cannot go on forever. There will be profit taking. Will it go back down to the 4,000, the 39.20 here? It is definitely possible, but I would say that those concerns are very low at the moment. That said, even though volatility has gone down, it is still fairly high for a market that just broke new highs. If we look at VIX, VIX is down at, this is the VXX, which I trade as a hedge. Now we see that the new support is lower, so yes, there could be volatility coming down again, and we will see that this may affect our trades in the next video on current trades. So for the time being, I would say not much concern. Market is up, but with a VIX around 18, it is still above average. The long-term average is somewhat lower. So let's not bet too much on bullishness. There will be a reaction. Whether the reaction at some point goes to this fib on this pattern that is 4093 or let's say 4100, or on this longer pattern around 4042, this could happen. As a matter of fact, if we look on the daily time frame, this pivot line with two different fibs, because those Merrimath lines and fibs, which are the tenet of my market reading, I don't use any moving averages or RSI, MACD, or any of that stuff. So, but here we see that we've got a strong support here. So if the market bumps on the strong resistance fib target and then goes into a trading range and eventually goes into retracement, for the time being it looks like the bullish resilience has been a good support, but if it goes below, I think this support area is pretty strong. So no major reversal coming soon, unless of course we have some major havoc coming as a exogenous factor. So now let's go to the 1 hour chart for tomorrow Monday. For some reason we see that this, of course we see here the same bullish resilience on strong resistance, so the same aspect being market going here to test support and maybe going higher. That is possible, but the strong resistance hasn't moved, even on this time frame, which is supposed to be more reactive than a 4 hour chart. And here we have an anomaly that the market, the Merrimath line is actually going downward. So generally, if you look here, when lines went down, market went down. So that would indicate that there is somehow in the next few days a potential consolidation. So we will check 4220 and we'll check those fibs, and maybe lower, but probably not in the next day or two. Anyway, that is it for now. I will provide regular updates on Slack, bwbflies.slack.com, and just drop a message if you need an invite here on YouTube. Anyway, have a lovely Sunday and see you tomorrow on Slack. Bye for now.